Welcome to The Intentional Investor with Matt Ziegler, where he and his guests explore the intersection of investing and life, portfolio and purpose. Nothing in this podcast is investment advice. Nothing in this podcast is advising you to buy or sell any security or to do anything with your money. Seriously, you should only act on investment advice from someone you know and who knows your unique situation. We are not that person. Matt Ziegler is a managing director at Sunpoint Investments, and the opinions expressed on this show do not necessarily reflect the opinions of Sunpoint Investments or of Second Foundation Partners. Securities discussed in the podcast may be holdings of Sunpoint Investments.
Hello and welcome to The Intentional Investor on the Epsilon Theory YouTube channel. I'm your host, Matt Ziegler, and I'm joined today by Mr. Social Leverage, Mr. StockTwits CEO, Mr. Captain of Team Gelato, who I understand to be a cigarette-endorsed Italian bike riding team. Mr. Friends, not as in the 90s sitcom, but you've panicked with Friends. You've turned it into Trends with Friends. More recently, I see you've added Trends with No Friends, which I love, by the way.
Yeah, people love it. Yeah.
I want to make sense of all this, but Mr. Howard Lindzon, welcome to The Intentional Investor.
Good to see you. It was fun to meet you. I mean, we randomly met, and that's kind of how life. I'm very much as I get older, I do less of it. I'm becoming more grumpy Larry David, but I'm very much a stumbling, bumbling investor. And
Well, what I love about this is we're going to talk about where portfolio meets purpose. That's the whole point of this show here, with our doing this with our mutual friend Ben Hunt in the background, who loved this idea. But I know from getting to know you and talking to you how much you think about this stuff beyond just the money aspect of it. So let's have some fun. We're going to spend an hour together. I want to start here. I want to go all the way back to the 80s. I want to go back to sneaking into yucks.
Yeah.
Is this something you advocate, teenagers sneaking in underage to comedy clubs in Canada?
Well, I think now teenage kids are sneaking into Columbia from other universities to protest. Like, it's a little different. We were not that serious. We had Mothers Against Drunk Drivers in the 70s or 60s. I was born in 65. So in my primal years, so just now recently, a few podcasts, we just went through a SERP environment where the world was supposed to be an engineer.
Okay.
And I used to have the saying, punch a banker, hug an engineer. And now it's more like punch an engineer, hug a businessman. We need more business people. But, when I started comedy, there was no internet. There was Second City. Canada was like a very big comedy town when I was coming of age. Second City, John Candy, Eugene Levy, Mike Myers, Jim Carrey. And Toronto was what Stanford was for engineers. It was a hotbed, for whatever reason, in the water of comedy. And there was this club called Yuck. There was Cafe on the Park. You go see comedy anywhere in Toronto, right? But there was a chain called Yuck Yucks, and open mic night, and I used to go, and I was probably 15. And you're not funny when you're 15. Well, you're funny if you're Jim Carrey. That's how obvious it was. But you're not
funny to your
Howard
friends,
Lindzon.
Though. Like, that's the whole
goal.
But
your friends aren't in the audience. They're not.
Yeah,
of
exactly.
Age.
Yeah. They're not paying to get in.
Yeah, making fun of my Jewish mother, that doesn't go well in a Pakistani crowd in Toronto. So you had no context. So I definitely wasn't good at it, but I definitely loved comedy. So you grew up watching Johnny Carson, and you're smoking cigarettes, and you had friends on, just talking about this ex-wife. And I was just a kid who thought that was the greatest. Even though I didn't know anything, I just thought Johnny Carson was the greatest. What a job. Like, I don't know. I was lucky, rich, had a TV as a kid, and my parents didn't check on me. And I watched Johnny Carson, and Steve Martin was coming of age, and he had his comedy albums, and Woody Allen's comedy albums. They were fantastic. And at least I had good taste. Like, I didn't, I was never a Bill Cosby fan. Not that you shouldn't have been, but it was Woody Allen, who's weird. It was Steve Martin, and it was it was Second City television that inspired me. And I saw Mike Myers when he was just beginning, and Jim Carrey when they were just beginning. And you knew.
Yeah, which is wild.
You just knew.
Yeah,
what I'm saying is you hear their name later and go, I remember that guy. And you just knew when he was 15, they were killing it. Jim Carrey was killing it.
Yeah, nobody did physical comedy like that. It's no surprise.
And voices. Mike Myers was just
Yeah.
character driven, very young age. Just high drama, high drama for a 15-year-old on stage, huge stage presence. And probably it's one of the most successful people of all time is
Oh,
in
easily.
comedy. Yeah. So lucky for me, that was, what a great coming of age,
So you take this with you. You come to the States from Canada for college, right? That's how you
Mhm.
end up in Arizona?
Yeah. And my parents, born on third base. So we had a home in Paradise Valley, and I
Okay.
was into golf. I love golf. And luckily my parents liked, Arizona, and it was a golf place. And I saw ASU. I went to a football game when I was like 11. I'm like, I'm going to school in Arizona State. And it wasn't like the other Canadian kids that were like staying at home, you know? And so that was my goal, is to move to the States when I was 11.
So you go to Arizona, you finish school, do an MBA, I think, and then
Yeah.
was stockbroker the first job out of college? Do I have this right?
Yeah, I was Canadian. So it was 90s recession,
Yeah.
Gulf War. So it was like, how am I going to stay in the United States, right? Like you open the newspaper, graduate, no one was hiring. It was a recession. And so you went to the, what do you call it? Where you go classifieds. And it was just, every job was for stockbroker. Everything was a cold calling job back in 90. So I just picked a cold calling job where you got to wear a suit. So it looked like an MBA could do it, and that was my first job. And they sponsored me to some sort of visa. And it was a Dallas firm called Epler, Guerin and Turner, which I think eventually became Dean Rauscher, which eventually became RBC. It was like 100 things on the way, roll ups. But yeah, it's cold calling,
Amazing.
1990.
So you're smiling, dialing, and cold calling. And then if I have the
Mhm.
story right, you end up cold calling somebody who ends up pitching you. Somebody flips the tables
Yeah,
on you.
back then you got the newspaper and local Arizona business, and you would just look for rich people, I guess. Like, I don't know, there's no
Right.
instructions. I don't know
No.
what I was doing. And I was just killing time. And maybe I was making 20 something grand a year, 30 grand a year, plus commissions. And this guy was, holding this ball called the Grip. There's a picture of him, local entrepreneur. I cold called him, went down to see him, and next thing you know, he was asking me for money. And I was smart enough to scrounge up a little bit of money to give to him, and off we went. I quit my brokerage job after a couple of years, and his company was blowing up, and we built this product called Pro Innovative Concepts, which was this incredibly fast growing, high margin products, promotional products company in the mid 90s. It was like a pet rock in the QVC Hall of Fame was our product. And we would go on QVC and the product would just sell and sell and sell and sell millions of dollars worth. And it was pretty cool pre-internet growth story.
And this company never went public. This was just a private thing.
No, I think the highest we got was like 30, 40 million in sales, which was huge. We didn't know.
Oh, yeah.
We were literally like clueless, clueless operators. We were doing every mistake, but we had such high margin, right? Like we were making the balls, the squeeze balls ourselves, and we were selling them with corporate logos on them. So our return, it wasn't like a hard business. Like the business was just locked into it. So we were getting paid before we shipped our product, and there were no returns because you put a corporate logo on it. So we had this incredible business that like had high margins, profitable before we started making the product, and very little receivables. So that leads to a lot of bad business habits when you're printing money, which we did. We made a lot of mistakes.
Sure. But high margins cushion mistakes. That's like one of the great things, right? If you have
Yeah.
something to help you hide the mistake or make you not learn the lesson.
Yes.
How's that one end?
So,
What happens?
just, it's a great question. It wasn't my company, right? It was a tiny,
Right.
tiny, yeah. So it was just aggravation. It was just like, wasn't my company. I felt we were just, I was the MBA guy that was like, you got to do it this way. Like, look at this case study right here about Duraflame.
Yeah.
And he was like, I'm a fireman. Like,
Why are you telling me
we
about
put
dirt
out
flame right
fires.
now? Yeah.
So, he didn't want to be a business. It was like an S corp. He was just buying car. It was just he was treating it as a personal bank account. He's a fucking
Sure.
great entrepreneur, great guy. It wasn't my business. And I was like, I'm going to start a hedge fund. Because before the internet, being an entrepreneur meant opening up a clothing store and or a restaurant, or
Yeah.
it
Brick and
meant
mortar.
before the cloud, it was brick and mortar. So, I was like, I don't want to do brick and mortar. I'll just start a hedge fund and ask people for money, even though I had no experience. So that was a horrific mistake because I hated every minute of it, but it was an entrepreneur, that's what I was doing. I was managing our money
Yeah.
that we were making selling squeeze balls. And luckily it was a bull market. So the 90s were very good. And they eked out a living through the mid 2000 to about 2005. And then I was just so sick of doing that. And luckily the internet came along.
Well, the internet came along before.
Not a good internet. A DOS internet came along.
But a crappy internet. Okay.
Yeah.
So a crappy internet
Yeah.
comes before. You survived the internet bubble on squeeze balls and hedge
Yes.
funds.
Yes.
Well, running one.
I don't say I was survived. I was miserably conservative. I just didn't understand the markets well enough yet. It was the first real bear market that I was scared. I just wasn't used to seeing things go down every day. And, the NASDAQ went through an 88% decline, right? So it's just like,
Right.
no matter what you did, you were wrong for a while. And so that really shapes, 9/11. It really just shapes your risk profile. Whatever wasn't shaped as a child really got shaped by my first bear market, which was, 2000 to 2005. I was like, fuck, I don't know what I'm doing. This is like, I really didn't know what I was doing. And I was just, people trusted me, but I honestly was learning on other people's money. So it wasn't like a joyous career. It was like, how stupid am I going to look today? And, so in the end, that's good training because I just learned that stocks can be fire, not things that go to the moon. And, but it did shape my risk profile tremendously.
Do you feel like that whole learning to be miserably conservative through that phase of being, because I guess being accountable, not just for your own money, but being accountable to other people's money, especially
I wish
during a
I'd
bear market,
never
that sucks.
done it. Yeah, I probably
Yeah.
wish I think I could be a YOLOer if I didn't have that era to have gone through it. I think
Okay.
I can appreciate the YOLOers. I think they're dumb. I don't
Yeah,
think they're.
but you know where they came from or come from.
I know where they came from. Like
Right.
I understand why it's happening, and the game's rigged towards making everybody a YOLOer. So I understand it completely. I don't envy them. I think it's not a way to riches. But so I got punished. Like I think it's like the sooner you get punished, the better.
Right.
Parents that helicopter and don't punish their kids are not helping their kids, right? You got to feel the fire.
It's that Jesse Livermore thing. It's the cost of tuition, and that comes, you have to lose something to learn something.
Yeah. So I think I've been very lucky. Post internet, there's just been fewer lessons. Everybody's got their doppelganger in every country. You on 24/7. You can build a business for nothing. You have instant communication. There's negatives with that, of course, but that didn't exist. The scale of what, before that, it was all about Excel. Now you don't need Excel. It's just, you can grow. So I think we went from an Excel world, which was a rather boring fixed world, to this open cloud world where no one knows anything.
Did you get
now this world where you have to be a business person? Excel does matter. The cloud does matter. AI does matter. But you know what matters the most? Being a business person, like, doing it all. Like,
outside of all this stuff in this period, but like when you get married, when did you start a family? Was that early 2000s?
Got married
90s?
in 96. 96, I believe. It's coming
So,
up at 29th anniversary.
Get a good present here. Yeah.
So, got married in 96. I was 30, 31. And then we had kids pretty quickly. By the time I was 33, we had two, and that was it. So my daughter was born in 98, my son in 2000. Right.
So this
So it
like,
was combined with the stress of the kids, we had the crash and we had just
yeah, that's a
misery.
lot.
Yeah, it was a lot.
That's a
So
lot.
9/11, all those things combined. So that definitely changed my risk profile. Plus my wife's a bankruptcy attorney, so she thinks everything goes to zero.
Oh, okay. That's
Yeah.
good.
Yeah.
Well,
She's never
everything
seen a
and
business she liked.
never
They
seen a
all go
business you
bankrupt.
like.
Yeah. They all end up
Well,
in
that's
bankruptcy.
you guys
It's
met in
kind of
Arizona.
true.
It is true.
Yeah. Yeah. Blind date.
Blind
the
date.
original Tinder where a family member introduces you.
Okay. Through a family member,
Yeah.
though, that was the trusted app of choice
Oh,
per 1990.
yeah, I mean, back then it was just you go out, I guess. Once you start working, it's very hard to meet somebody. So yeah, you took blind dates. I think that's still a thing.
It's still a thing. So does she think you're crazy? Like while you're running money for other people and you're dealing with the kids? Like what gets you out of the hedge fund space?
The YouTube. So again, I guess it's still even though I wasn't doing creative stuff at a hedge fund to try to survive, I think I still had that creative soul. And YouTube came out, and it was probably the first internet product that like made sense to me, right? I got lucky. There was an Apple store across from my office in Phoenix, stumbled in there in probably 2002, bought my first iPhone, not iPhone, iPod,
Yeah.
the white headband. And I was just like, that's the future.
Yeah.
Right. Like, and so I got lucky. I was just stumbled in and everybody thought Apple stores was a bad idea. Gateway had failed, like Dell, like there was just no way Apple's going to, but I was just in that store and I saw the traffic and I was the user of the product and it was my first big hit. Like I was like, I'm Apple. And in the hedge fund brokerage business, there's no Apple. You were using Internet Explorer and you were using like, market data from like you had to use an IBM machine and, you had to use a Dell machine or a compact computer. There was no Apple computers. There was no internet. And then, you were using Netscape or Internet Explorer. And I think it just became such an Apple fanboy. I was like, I got to move my business, like everything to the internet. And it just couldn't. It was just so tough to run like a research and investing business off Apple products and just the internet. And so I was just unhappy and dilly-dallying and YouTube came out and while everybody thought that was silly, I was like, man, this is the future. And I just started, a company. Like basically my idea was to put CNBC on YouTube and create a 24-hour business channel on the internet. And very much like Second City Television was it was these guys creating a cable. It was just a spoof of a cable television show. That's what I grew up with. So I said, wouldn't it be funny if I just did a 24-hour YouTube channel of Second City meets CNBC? And I pitched Fred Wilson, who is like one of the most famous investors. He was just a regular guy to me on the internet. He loved the idea and he invested. And off we were running, raised about $600,000 to start Wallstrip. And 7 months later, we sold it to CBS for, close to $10 million. So pretty good IRR. We had no business. We were just making this one show a day. So we set out to build a 24-hour CNBC, and we built a 3-minute daily web video show that sold for $10 million. I go, I'm in, So I was done with finance for good, working for CBS.
You were going to be famous.
Nowhere, I was internet celebrity for a moment.
Absolutely.
And I never looked back. I mean, I was done with the world of investing. And quickly came back to the world of investing because Fred Wilson and a lot of the people I had made money with started showing me deals. And, all of a sudden I was some expert, I guess. So people were showing me things and I was just smart enough to just say, yep, I'm in for 10K or 25K. So I was just writing checks at the right place at the right time as Web 2 exploded. And you had to be pretty bad not to make money. So let's just say I did pretty well.
Well, go back to this for a second because I'm fascinated by this. You meet Fred Wilson. How do you meet Fred Wilson? Was it like in the comments
He
on
had
his blog at
so
AVC?
I was searching for term sheet as Google, I didn't know how to set up a term sheet because I was looking at a golf company in Phoenix called Golf Now. Well, again, before I had the idea for
So many things
Wallstrip.
just keep repeating with you. We have comedy clubs and YouTube and Second City TV. We have golf.
So
You have like 6 through lines.
I was searching for, this guy had stumbled into my office pitching me his son's golf company. And I was like, it's an unbelievable idea. Tee times, it was kind of open table for golf. I didn't know how to write a term sheet. So I searched term sheet on Google and all these venture capitalist blogs showed up. And so I stumbled into Fred Wilson's blog and I searched term sheet and he was just, here's how you do a seed stage term sheet. And I was like, holy fuck, that was easy. Copy paste. And then discovered his blog and sent him a thank you note in the comments. And it just became this cast of characters on this very famous venture capitalist blog who was kind of one of the best investors and media guys, just a regular guy. But he used the blog as a way it was like the original Twitter, except there was just one channel, Fred. You could go onto Fred's site and there'd be the bouncer and it was it was just all these cast of characters that were like running Fred's community as if we were like a mini Twitter. Like if there was a guy making fun of somebody, we'd kick him off or we'd tell Fred.
Sure.
Like it was just the center of the internet for that type of stuff. And so there was this great keiretsu at the beginning of Web 2, right? Everything was so new. Like the idea that you could just communicate. So everybody was, of course, there was mean keyboard warriors back then too, but just the aura of Fred just kept everybody positive. And we were all there just like, this is like, oh my God, we're friends with Fred. We're seeing all these great deals. Just keep your mouth shut and don't cause a problem. And so Fred was sharing all this knowledge and this whole group of bloggers, David Cowan, Brad Feld, just all of us were just now paying it forward and writing blogs and linking to each other. And that was the internet, links. And that was how the internet really, Web 2 started, was the cloud and links. And it was just a bunch of people just sharing ideas.
And this whole like playing it forward thing. So the brokerage thing, you do the stockbroker thing, it turns into the grip thing and the squeeze ball things. It turns into the hedge fund thing. It turns into meeting Fred Wilson, Googling term sheet, Wallstrip, sold to CBS. Now you have money and now you're getting to write checks. You're starting to make these first private investments.
Yeah. And I ran out of money. 25K, it doesn't seem like a lot until you write like 6 of them. And then you're like,
it stacks up.
Over allocated and they're illiquid. And 3 of them seem like really bad ideas. You know what I mean? Like, the hit rate's not as good as people think.
Right.
And so you realize you can't play in that world. I didn't have that much money. So I had, Twitter came along and I was so fascinated by it. It was pre iPhone. So it was a BlackBerry. We were all using BlackBerries, including Fred Wilson. And I said, when Fred invested in Twitter and he showed me the deal, and it was a 3 million raise on 17. And you can understand at the time, Twitter was popular already. It was probably 100,000 people using it and all BlackBerry. And no one was ridiculous. It was just venture capitalists and nutback like me. And we all thought it was dumb. Like, so 90% of the conversation is, this is stupid. So that's what Twitter was at the beginning. Pretty much the same thing as today. 90% of the people going, Twitter's pretty stupid.
Right.
But in between, there's 44 billion of value created and destroyed. But he pitched it to me and I was like, I can't fit. I've already written 6 checks. 3 of them are going to 0. And this one seems so overpriced. I remember saying to him, I was like lecturing Fred. I was like, dude, like, how are you going to make money? This 20 million valuation. Like, what are you idiot? And I was like yelling at him. And he goes, okay, you don't have to do it. And I think that 25K check would be worth about $8 million.
Yeah, it did okay.
Yeah,
it's an okay IRR.
As luck would have it, even though I didn't make that check, I started StockTwits. And I was super bullish on Twitter as an ecosystem and made a lot of Bitly, TweetDeck, just made a ton of investments around the ecosystem, and I've done well despite missing like the granddaddy, which was Twitter. Even though I was a user, I made the cardinal error of projecting Fred understood that the Excel spreadsheet was coming to an end. So I came from this Excel world.
Right.
And Twitter was the beginning, and YouTube were the beginning of a non-Excel world where there was no model. You had to network was the model. And Fred had a brain that
could see these things.
I guess that's why he's the best.
Yeah, exactly.
To live in a non-Excel world when no one understood what a non-Excel world was, right? Like that's why he's a billionaire.
So at the same time,
I'm a thousandaire. I'm a thousandaire because I still think Excel is useful.
Microsoft thanks you for your service. The idea though because a lot of good comes out of this. So StockTwits built on the API of Twitter. And
Correct.
This is, what year is this? When did StockTwits start?
2007.
So in 2007.
It started as a Tumblr blog and we were connected to the API. And I was always yelling at Fred. I'd sent him this BlackBerry message to buy RIM, $RIMM, because you couldn't search. Twitter was already a mess with hashtags. And so I came up with the cashtag, and just by luck, it just made sense, $ticker. And Fred sent me back a immediate BlackBerry BBM saying, this is very genius. And, within a week I was pitching Jack and Av at Twitter HQ that they should have twitter.finance.com and they would rule the world and take over Yahoo and Bloomberg. They didn't see what I saw. I was like, eventually the president's going to tweet. Like that's what I was saying in 2007. I didn't know he'd be orange and loud and, have 10 thumbs, but I was right. There's a big difference between being right though and making money. And I went in to pitch Jack and Av and I was like, why don't you slow down the stream? Like, if Kim Kardashian farts in a crowded room, do people really need to hear about that? And what is real time? Like 5 minutes delay matter versus if you get Osama bin Laden, that's going to drive the futures, right? Like if a plane lands on the Hudson, like that airline stock or, is going to change, right? So Twitter just didn't think about, they were just engineers. They were San Francisco engineers. They weren't Wall Street guys. If they had been Wall Street guys, there would have been a much different ending to Twitter, much more profitable ending. And for bad or for good, they saw it as like kumbaya, world peace, Arab Spring, plane lands on the Hudson, they're saving lives. And I was like, you guys don't get it. Like just delay the stream 30 seconds and you'll be billionaires.
Right.
And,
that's all you have to do.
Yeah. They can
Slow
still
it down,
do that today. Now Elon's doing that for himself. So, I'm sure he's got a hedge fund somewhere trading against the stream. That's me. That's the way I believe the world works. It's going to monetize it somehow.
Somehow, some way, even if it has to offset some Cybertruck incidents at the moment. Yeah.
Yeah.
What, you got to tell this story too, just because when I was going back through stuff, you did have a fun exchange, I think, at one point with Jack Dorsey on Twitter, where I believe your daughter stepped in to defend you.
Yeah, few. So
the one I'm talking about?
Always, yeah. So
Okay.
I think I don't know the guys very well, but it was always confrontational with at least Jack, and even they had so much management over the time. Like the good guys at Twitter were, gone by then. Josh Ellman, who's now at Apple, and people that really loved Twitter for the community side of it. Twitter always felt like fake community, the way they called things Flock and Bluebird, and just always felt like fake, right? This goes to me talking about today's world. You got to be a business person. You can't get away with being Jack anymore, or these people, like, So with Jack, it was always just like, what the hell? Like you can't run one company while you're running two. So it's just what people do on FinTwit. What is FinTwit? Armchair quarterbacking. Like, again, like may not like us, but I consider myself the best corp dev person in the world. I'm doing it for free all day on Twitter.
Right.
I mean, it's what you do. I don't know. Second guessing. I'm like, I could run a curriculum in second guessing 101. So for years, we've been second guessing Jack Dorsey. And I think at one point he's just fed up with me and he came at me as he shouldn't have done. This is why I don't think he knows how to use his product. Meaning, don't mess with Howard because my daughter was on Twitter too. And so he sent back a picture of a mosquito or something, like I'm a pest or like just an asshole. And eloquent Jack, one character. Oh, I got you. And then and he said something like, it seems like you need a hug. This is coming from a guy who, like, I don't know what his sexuality is, but he hasn't been. These guys all project. He hasn't been. This is the aggravating part. They're not normal. And I'm sure he's a good guy, but like, you don't pick a fight like this. Like, he's a public figure, so that's what you do on Twitter. So maybe I went too far. I get that. So he came back with a mosquito. And I was okay. That's as good as Jack can do. My daughter, who happens to be on the internet, comes in over the top and she says, Jack, my dad got a lot of hugs. And Jack quickly fled the scene of the accident. And I think that
you don't respond back.
Yeah, you can't. Your fight with my daughter is coming to my So I just think that was the era of Jack, right? Like they gave this guy power over a product that's just an immensely incredible product that's always somehow just been an inch off, and it's a shame. We went from, I think, Jack being bullied by the left, as the left can do, as we're seeing, to Elon, who just, if you bully him from whatever angle, he's going to take the opposite side. So what you ended up with an angry right. Now you just have angry Twitter because the guy running it really just, if you bully him, it doesn't matter what side you're on, you're going to get bullied back. And I think that kills Twitter. I mean, Twitter as we know it is a dead product. And I say that because I know a lot of employees that don't use it from the early days. I only use the desktop version. So I don't feel like I'm going to miss anything if I don't use Twitter. Whereas, for about 10 years, Twitter was, if you weren't on Twitter, you were not in the flow. And now I would say, if you're using Twitter from your mobile, you're wasting your time. And I say that confidently as someone who doesn't use Twitter mobile. And I say that confidently about, being friends with really smart people, that it takes about 3 to 5 days to kill pretty much any habit, from maybe not heroin, but with good 3 to 5 days, whether it's sugar or whether it's, fit, you can get yourself kind of off most habits in 3 to 5 days. And Twitter is quite simply another one of those habits that people can get over if they want to put their mind to it. You're not missing anything. And I think there was about a 10-year period where if you weren't on Twitter and really putting in the work, you were completely missing it. And I feel like that was an edge that no longer is an edge. And part of the edge is not knowing that it's not an edge anymore. It's not a real-time network anymore, period, end of story, full stop.
Go back there for a second. Then I want to talk about what networks have replaced that, because I think that's really interesting for this. But say at least, go back to Robinhood. Robinhood happens because you break off of, you use the API, you start StockTwits. Mm-hmm. Robinhood only happens as an opportunity because you started StockTwits, arguably.
Correct.
That's fair to say?
Correct. Yeah.
Tell the story about how that happens and what they saw as the opportunity, which was kind of everybody else's customer acquisition cost. And I think this starts a turning in the whole market.
Yeah, it happened much later than I would have suspected. So I had the idea for Robinhood way back with Fred. I was pitching this with StockTwits. I just didn't want to build a broker dealer. I'm not a software guy. I'm not a SEC guy. So the original idea was like 2008. I went to Jack and Evan. I'm like, guys, just buy a brokerage. You have, if Mark Andreessen says he likes Apple, shouldn't you be able to click on the Apple ticker and buy the stock? And they were like, kumbaya, someone else will build it. I don't know what they were saying, but they sure as hell didn't care. And so it took up much longer for people to have the same epiphany that I had. So again, if I trusted myself, which I did, and I had all this data in my head, no one in America was building this, right? The Apple Store comes out in 2009. And no one's building a brokerage. What people were doing was building a competitor to to Vanguard. So the way venture capitalists work, and I learned this, through this Robinhood exercise, is that VCs just didn't believe that there should be another E-Trade, for better or for worse. That was their decision. And their angle of attack was assets under management. To them, venture capitalists were like, let's put money to work and let's disrupt Vanguard. And my whole understanding of Vanguard and Betterment and Wealthfront and all these companies that were being funded was like, this isn't 10 times better than Vanguard. In fact, it's a trap, because you go with Wealthfront. If you're not unhappy, it's easy to switch. Like there's the switching cost is zero, which is really dangerous if you're going to go pay for a user and then they're unhappy and they leave in a second. And it wasn't 10 times better than Vanguard. So I just had that one instinct that I was waiting for there to be because of StockTwits and Twitter, I knew that if you sent a link, I just thought that was going to lead to a tremendous explosion of trading. And no one else really believed that. So when Robinhood pitched me, this was already after I had backed eToro. So the first company to pitch me this was a company in Israel. I had flown over to Israel to do speak at a conference, and the first company to pitch was a company called eToro, Yoni Asia, and I saw it was really crude, trading platform on mobile phone called eToro, and I was like, this is genius. And I was lucky to invest in that as a seed investor back in 2010, and still holding today. It's probably a $4 or $5 billion company.
Yeah.
And quietly built a huge business overseas. And so Robinhood didn't even pitch me until late 2013. So eToro had been around 5-6 years already, but not making a dent in the United States. And so Vlad and Baiju pitched me. They had already tried to copy StockTwits. They'd come the right background. They were Stanford guys. They were quant guys, and they were working on speed trading. I forget what it's called. And that's how little I know about the infrastructure stuff. But they knew infrastructure from trying to create quant products. But they weren't having success on the consumer side. But they had this one last idea, which was to build, a very mobile, friendly kind of Snapchat of trading. And as luck would have it, they called me and they were out of money. And I flew up to Silicon Valley and they pitched me, and I saw the app and I'm like, if you build that, that's a home run. So we put in $100,000, which is kind of the check size we had at the time. And I just called my network and I said, this is the one. And it's really one of those rare things that I was just right.
Yeah.
It's not like it was just right place, right time. I had the domain experience. I had StockTwits. I knew the Twitter, what was doing wrong. If they built it, and believe me, they made a lot of mistakes along the way, and people know, ZERP has led to a lot of business mistakes, a lot of let's go to China in year 2. I mean, that's not smart. You know what I mean? Like listen, everybody, the history will get rewritten and glossed over, but man, some of the money waste, some of the misallocation of capital, despite the success of some of these companies, is just staggering. And, it hurts. It's done very well off these investments, but it hurts how unstructured and how poorly thought through and how much capital was wasted to get to 5 apps that matter? Uber, maybe Robinhood, Coinbase, Airbnb, Google Maps, Spotify. Spotify's only 50 billion. So I'm saying not that much came from, all that money invested. Yeah. Which goes to why I said it's an era of business people coming up next. That was just a misdirection. And you think about what NVIDIA says, if he's, I'm not a tech person, but if half of what he said is true and the GPU is the new computer, right? You don't need to engineer. Wouldn't that be nice? Because what's the worst part about, what did Steve Jobs hate? Engineers. What's the worst part about building a startup? Your fucking engineering costs. You got to build for Android. You got to build for iOS. You don't even know what's under the hood. So I think NVIDIA is probably going to be the biggest company in the world if they're correct, because they've solved the biggest cost problem of this new generation, which is overpriced engineers who move code around and are almost as evil as the oil barons at this point, right? Moving a code around to get you to spend 1 second longer on a website. Probably the least productivity for the dollar invested of all time.
Right. And not that
It's a new
Adderall
form
is
of
going to.
tobacco. It's a new form
Yeah,
of
exactly.
tobacco. Social is just a new form of tobacco.
So inside of this, go back to this business, the business person idea. So we're moving, we're past the spreadsheet. I don't want to say we're past the cloud yet. We're into this new era of this period. And like, what's the business person? What's this angle? What's this perspective you have?
Well, you have to use Excel. So by Excel meaning you can do acquisitions. You still need
Mhm.
Excel to measure things. You still need
Sure.
Excel to have a business model that says, here's what my margins are. You can't just raise capital and worry about margins later. You have to know what the margins are today. Like,
Right.
how many widgets would you have to sell? Like the old movie, Old School, Back to School. It's back to school days. People
Back
should
to
go
back to
watch that
school.
movie.
We need more
Go
Rodney
back to-
Dangerfield
We
in
need
our
more Rodney
regular.
Dangerfield.
Yes,
we
we
need
do.
more people reading Shoe Dog. His first 10
Yeah.
years, he got to 10 million in sales. And you shouldn't have to live the life of Shoe Dog because that was a horrible life. He had to get on planes and be away from his family. But you have to pull away the good things out of Shoe Dog, which is these great businesses take time. When I hear founders, I think Mark Pincus said it, and it was very, in hindsight, I don't think he's just saying it, but, I'm going to build a 100-year company. If you say that, I immediately distrust you. Like, the point is you should build a business that works. And if it becomes a 100-year company, you'll know in 40 years. So I think we have to get back to the idea of what's the business, right? Like in an era of I've seen Uber, but let's be honest, there's tons of mistakes made. I've seen Airbnb, let's be honest. Is it that great? I've seen, you know what I mean? Like I've seen everything. So now that I've seen everything and I've seen ZERP and I've seen bad behavior and I've seen good behavior and I've seen, stupidity and I've seen bubbles. Okay. What is your idea? And why are you doing this? And do you want to do this for 10 years? We got to get back to asking these questions. It's why are you doing this? This is a grind. Maybe go be a second and third command or a fourth command or go be travel and be, go be a journalist. So I think we have to ask better questions. The allocators of capital have gone away with being bad allocators or misallocators of capital because capital's been a commodity. It's been 0% interest rate. It's I'll just print more. But in an era where they may not print it and now capital is constrained, how do you build businesses in a capital constrained world? Well, as luck would have it, we've never been loose with capital because of who I am and how my risk profile was formulated. I've seen bankruptcy and I've seen 88% drawdowns in an index. So I just can't get that out of my head.
This is the benefits of being a miserable conservative or miserably conservative.
Yeah,
you called it.
It's the benefits of just seeing the towers go down 9/11 and not sleeping and really seeing trauma, really feeling it. And October 6th was one of those moments. October 7th for a Jewish person, it's traumatic. Yeah, see what's going on in Colombia. I'm very upset. So I just think it's time for people to be more serious about not being an entrepreneur, right? And some of the people that we trusted have completely blown their cover, in a Bill Cosby way, Paul Graham at Y Combinator. We were kissing that ring, not necessarily just me. He was writing these essays and he seemed just like Bill Cosby was writing jokes. Peel back the curtain, you see a monster of a human being in Paul Graham, just a monster that people idolize because he's allocating capital to overpriced startups from Stanford. His stance on how he thinks about the UN and Israel, he doesn't give a shit. So again, you peel back, it's kind of like Wizard of Oz. The wizard has been exposed, and they were an era of loose capital, the cloud, Apple, the internet. Let's see what you do in the next go around. Let's see what you go through a real bear market. And, so again, I just be careful who you trust, be careful who you take capital from, be careful who you listen to on the internet. Those are things we take very seriously at Social Leverage, and be careful of me. I mean, I'm out there projecting, telling people my story. You don't have to like me. You go to YC. Just know that I won't fund you. By the way, we stopped funding people from Harvard years ago. We've had bad actors years ago. This stuff has been going on for decades with Harvard and, Berkeley. Just because you're smart doesn't mean you can run a company. And so we're starting to see these things speed up because, listen, I hired from Arizona State. I went to Arizona State. Why? I don't know why I was so biased against hiring from Arizona State. There's great kids. I went there. It was a bit of a knucklehead.
Yeah.
So I think that ribbon, that's been ripped off the cover, right? So I think there's just, what a great time to be a business person and to get good mentorship, and to pick good mentors and to build good habits, especially in an era where, as I just told you, you can break any bad habit in 3 to 5 days. So what a great time to build good habits. You don't need Twitter. You don't need all this nonsense. You just need, and so I think email is the next big thing. I think smaller networks are the next big thing. Obviously, Telegram's very popular. I don't use it, but it's very popular. I love WhatsApp.
WhatsApp's awesome.
I have days where I don't use it, but there are days where I need it.
Sure.
So I'm very much, the phone has become face down most of the time. I work from my desktop. It's purposeful work. I don't think it's for everybody, but if I have my desktops, I have very nice desktops and I have them in different places. And that's my workspace. That's where I'm doing my serious work. If I have my phone, it's for using the phone, right? The smaller, the better. The better. FaceTime works great. Zoom works great, but generally I like to do my Zooms like this.
Yeah.
My phone is for phoning people and for emergency texts and for goofing off, right? But
Important stuff.
I think the desktop is for the important stuff. So I just think this is going to be an era of like incredible businesses being built. So I'm pretty bullish.
Yeah, I think you have to be, because
I'm not bullish on tech. I'm just bullish on like good business practices.
Well, it's a different skill set. I feel like that's part of the reason to be bullish, because the skill set just shifted again.
Yeah. The skill set switched to marketing too. Like,
right.
Hey man, show me a good marketer. Like, if you know how to do Facebook, that's just one little aspect that's been arbed away, right? Show me how to do billboards. Show me how to do a TV ad, cause you've got an arbitrage there. Show me like real marketing. Show me how to write copy. Show me to get customers without spending. Customer acquisition was free for about 8 years. And so was money. Of course you were rich. I mean, you're supposed to get rich. Customer acquisition was free and money was free. I just happen to be lucky. There's some people that are now packaging themselves as these geniuses. And I didn't see that coming. I really didn't see people being foolish enough to believe in these false prophets of the Web 2. So,
and I think part of what's so interesting about customer acquisition being free, and even in the Robinhood story, like part of what made Robinhood great was
StockTwits. They don't appreciate it, but StockTwits, I got them their first 100,000 users because I was giving away accounts before they were even live on StockTwits. So you had to follow me to get access. Again, I did that. I made money off that, meaning people that follow me got a service. I got onto Robinhood early. I made money because I was a Robinhood shareholder. Like, that's where you make the money. But am I happy about how I didn't predict how things would end?
Sure.
This was that era that everybody was just free. And
it's so interesting though, how it's in that case, the acquisition is free because you're telling me on StockTwits to do this, hey, check this thing out. That's all like free advertising, that word of mouth virality.
It was negative, like Uber.
Right.
You told 10 people. Not only was it free, you told 10 people. Holy shit. Go try that same strategy today. People won't click on the link.
Exactly. Because the trust factor, we've raised this threshold for how we trust this stuff.
When's the last time you downloaded an app that actually changed your life? Like, never.
Right. In fact, the best I could get is re-downloading an app. Like, oh crap, I'm at the airport. I have to re-download.
You're going to have to hear it 20 times from different sources before you'll try something now. Right. And that's the penalty for being so easy for too long. And so it's a whole different type of mindset that's going to prosper. A whole new set of skills is going to prosper. I wish I was 40, but I happen to be 60-ish. So, my punishment is time is behind me. I'm now in the later stages of my career. So we're trying to pay it forward and tell people this stuff. No one's really listening. Everybody still wants to get rich quick. Everybody still wants to get rich quick. I don't blame them. I would too.
Everybody wants to get rich quick, but what would you say to that? If I'm a 20-year-old coming to you
I
and
don't
saying,
know how it happens. I think it did happen during this era.
oh, it definitely did.
Yeah.
I've met some
have
of
a
them.
lot of,
I've worked with some of them.
And I think God bless them. I mean, you can't undo it, So I'm just like, but they're not serious people, a lot of these people.
Yeah.
Right? Because they can't possibly be serious, because how could they possibly appreciate being an overnight success? That's not their fault.
But is this part of the YOLOing
their
thing?
Fault.
Like if you live,
No,
is it different? How do you separate that?
Everything's been gamified and things are stacked against the government's made so many bad decisions for so many years. And prices are so distorted and the misallocation has gone on for so long that, it's the kids, what you're paying for school versus what I paid for school, what you're paying for mentorship versus what I paid for mentorship. Twitter was free. I mean, I stumbled into Fred Wilson for free. Good luck getting that
on
mentorship
the blog
today.
in the comments. Yeah. How are you going to do that today?
Fred's not even blogging anymore. So, I mean, like that's a cost now that's out of the system. Like you can't, even if I pay it forward, like, do you believe that I have that good a relationship with Fred? Like who? I don't want to prove to anybody, but like, you wouldn't even believe that stuff was going on. It was just a magical moment in time that I just loved, and no different than like the troubadour was for music in San Francisco for an era. And if you just happen to be there, I don't want to apologize. I don't want to brag. I just happen to be there. I don't see that happening. If you're looking for that to happen, it's not going to happen in the same place. So I'm not quite sure what's the next big thing, but it ain't going to be what just was. And it definitely won't be easy money. Although I can see why kids still want to play the YOLO game, because that's the playbook that Chamath and all these people, that the false prophets are using. I'm not besmirching Chamath. He's a very smart guy, and I think he probably means well. And as Phil Perman says, I'm sure his kids love him. God bless. But at the same time, I think there's false profiting. Like,
so many people are always going to follow that. The thing that just worked, the thing that they saw that just happened. And that's the other reality.
And I think the benefit of knowing the market and following price and like spending 10,000 hours doing StockTwits and seeing how people behave, that's my edge. So I'm just going to work that edge now until I die. But I'm also going to be honest about that edge. It's not, I can't statistically prove it, but I can statistically live my life in that way and, try and show people what I'm doing. And so that's been fun. Just the idea of like knowing in my gut that I have a statistical edge, but not really being able to tell you this is going to surefire way to get rich. If you pick any one of my big ideas, it's going to be wrong. But if you pick a basket of my big ideas, I think you're going to do pretty good. So.
Well, here's the baskets of big ideas. I know I got to get you out of here. I got some notes. I want to summarize this real quick for the people watching.
Okay.
We talked about money, as in money and friends, the social opportunity, social leverage, how that even when you pass on something like Twitter, back to this basket thing, just Twitter yields StockTwits, yields the cashtag, yields Robinhood. The opportunity is there. And your whole career arc, it's about like networks of people and how they stack together. The jobs and the opportunities came from the people. Fred Wilson in the blog comments, which is wild. On the intellectual side, we barely got to touch on it, but seeing the opportunity in YouTube, to the blog, to the writing, to the daily things that I've been reading for what feels like almost decades now. How long that's been going on. And now you're back on YouTube again with all these shows.
Yeah. The biggest mistake was, again, I don't like seeing my face. So I don't love video, but I do love video, right? Meaning
it works.
The people that like me can put up with my bad video, and it's more about audio. So Big mistake was I tell people I spent way too long on Twitter. So I'm not the angry old guy who's mad at Twitter. I'm just the angry old guy at myself for knowing the nightclub was not cool, but lazily staying there because that's where I thought my network was. And that's, if I can teach people anything, it's that like the rug got pulled on me, right? Like I'm shadow banned just like every other person was. And I should have left like Josh Brown left long ago to build my YouTube audience. Now, I'm telling people on YouTube that our Beehive investment is much along the same lines. It's like, if you trust YouTube, you're an idiot. Like comics are fleeing YouTube because they're getting screwed.
Yeah.
So they're the man, just like anybody else is a man. So I think what's old is new. You know, one of my biggest trends is email, right? Like if you have an email user, they have a Gmail account, they're going to see your email.
Yeah.
And that's a pretty powerful.
There's not an algorithm there in the inbox. Like it's coming, it's hitting the inbox.
Well, there could be, and there could be deliberate. Yeah. Nothing's perfect, but I know my readers will call me if there's an email problem. Like they'll figure out a way to reach me and go, there's something going on. Versus Twitter, no one's going to tell me, hey, I'm not seeing your tweets.
No, because you wouldn't even know. You wouldn't even know that you're not even seeing it.
So again, this goes to the era of business. Everybody wants to get rich overnight. There is no surefire way to get rich overnight. And Warren Buffett didn't start making real compounding until his 60s. So like do the math, you know, your 20s and 30s and 40s, you're saving, you're grinding, you're building your network. The real wealth comes in your 50s and beyond. I know everybody wants to be rich in their 30s, and it will happen for some, but you also be careful what you wish for. But I wish everybody huge success. I think the tools are out there in the market to learn how to invest. So then the other thing that's my whole shtick is like, learn the language of the markets. Right? When I was growing up, it was like, learn Chinese, learn French, learn Hebrew, learn Yiddish. What a fucking misdirection that was. Aren't we all
learn money.
English?
Learn money.
Learn the language of fear and greed. Like get wrecked. You know, fuck up your first $10,000 account. You know, education has just continued to be the biggest nightmare.
Like you said before, go back and watch Back to School again. That's probably one of the best lessons for this era.
Who's going to pay the Teamsters? Yeah,
who's going to pay the Teamsters? Yeah, when he's doing with the econ
what's your
teacher.
Widget? What's your profit margin? What's an A? It was so great because I was that guy. I was that guy in the back of the classroom just making fun of my teachers.
Right.
And here we are 50 years later. I'm like, the teachers are corrupt. The teachers are pro-Palestine. You're not pro-Hamas. You know what I'm saying? They're the terrorists. That's the terror. It's like that. It's like the horror movie where like the Friday the 13th, they're calling from inside the house. That was a frightening thing.
That was supposed to be bad.
That was supposed to be bad. They're in the house. So I really worry about that stuff. But luckily, my kids are kind of past the college era. So I feel bad for parents going through all this stuff right now. It's brutal. But parents got to be parents.
Right.
You know?
We all got to be team human first. We all got to take care of each other. And I think that's one of the things that you're a bright light out there in the community. You're helping make people laugh and keeping people talking about this and keeping them honest about this. And that's a beautiful thing.
Smaller networks, like we found each other through Benjamin. Smaller networks matter. Yeah. You don't have tweeting doesn't matter. It does matter. Like I've learned a lot about the Israel scenario and I've learned more about the UN. So I'm saying it's not like Twitter's useless. It's just not what it was. You have to use it in a different way. Yeah. Yeah. But I think more important to have a tighter network, not a looser network. And I think kids in the last 10 years learn what a loose network is, and they're going to learn a lot about what a tight network is when trouble hits. So build that more of a tighter network and really be careful who you pick as your mentors. Because a good mentor can really change the direction of, your life. And anyways, it's great to catch up.
You're an intentional investor, Howard. Great. Thanks so much for the time today. Talk to you later.
See you, everybody.
See ya.
See you, Bob. Thanks.
Thanks for tuning in. Be sure to like, share, and subscribe wherever you're watching The Intentional Investor so more people can find our show. You can follow Matt directly at cultishcreative.com or at cultishcreative on Twitter. For more great content at the intersection of investing and life, check out epsilontheory.com or at epsilontheory on Twitter.